Welcome back to our show, your show, Let's Talk Stocks. Joining us this morning again is Miguel Lewis, Business Development and Sales Manager at QMax Wealth. Of course, he's here to talk to us about the different investment options that QMax is offering. Welcome, Miguel. So you're not just taking money and investing for clients, but you also helping to raise monies for companies and businesses that are looking to expand and grow.
That is correct.
Including listing on the Jamaican market. Talk to me, in this day and age though, over the last couple of years, we've seen significant changes across the capital markets. I mean, what with interest rates going higher, stock markets sideways sometimes. What are you really saying to clients? What should they be doing now? What should people be doing with their monies? No.
Well, our perspective is that each investment solution operates as a significantly important part of a client portfolio. So it has always been important to diversify a portfolio and to ensure that, all your eggs are not in one basket, as we like to say. However, when we look at high interest rates, we know that it is not sustainable for the long term. When we look at clients, we're saying, well, you want to ensure that your portfolio is diversified, but that you're also positioning yourself for when those interest rates come down to take advantage of the likely movements in the equities markets. Because again, money is not going to disappear. It is going to reposition.
Yes.
And you do not want to wait until the equities market is running away, with significant returns, and then you try and chase it, So you want to try and position from now to take advantage even before those moves begin to happen.
The bond market has done pretty well over the last couple of years, I guess because of how rates have moved. Is that something that you think there are clients who you'd still be recommending bonds to?
Yes, well, every investment decision is going to be based on the client's investment objective and financial goals. As we say, we put the client at the center of every conversation. If you are able to lock in a return of 11-12% for another couple of years, that's definitely not a bad thing given where we see the market and the fact that you're not expecting to see interest rates running up to 20-25%. Anything is possible, but you're not expecting to see that. And so getting a rate of 11-12% and being able to lock that in, right, for that time frame. So depending again on your objective, on your timeline, it could be a suitable solution as a part of a client's portfolio.
I know you say you do pension fund management. Are we seeing people, really investing for their pension, for their retirement income? And what would you say to persons now generally about, retirement planning?
It's certainly an area where as Jamaicans and as Caribbean people we really need to pay more attention to. It's a significantly small percentage of the Jamaican population, for example, that has funds in a registered pension fund. So, we really want to encourage individuals to look to the future and to say, what can I put aside from now to take care of me in those years when I might not be able to run around and do the 9-to-5 thing anymore? Gone are the days when you want to be telling yourself that your children are a pension. You want to be leaving a legacy for them and not necessarily the other way around. So I would encourage every individual to ensure that they're a part of a registered pension fund, and along with that they have a supplemental investment portfolio that
Okay.
helps to supplement that pension when they retire, because you know it is the best pension fund will only replace 75% of your income, and so you want something else to take care of that additional 25%. Yeah, so plan from now for the future. You know, don't wait until you're 5, 10 years before retirement. You know, but if that's where you are today, it's still better to start and to do something to set aside funds for that significant milestone that you know is coming than to get
If you live
there
long
and
enough,
not
it will
have
come.
anything. Well, yes, yes. I hear that we're living longer, so must be something in the air in Jamaica.
Yes. Back to the equities market. I look in well, certainly in the developed countries, it would seem that the increasing of rates by the central banks has tapered off. Generally, people looking in the US, and the argument is how many cuts will the
Right.
Fed do this year. In the UK, our ECB, European Central Bank, is the same kind of argument. How many cuts will be coming this year? And as such, we see investors positioning, certainly internationally, in the stock markets and the commodities markets. Is Jamaica at that place? Certainly, Bank of Jamaica last month would have indicated, well, they would have held rates steady, I think, at 7%. But there seemed to be that same line of argument about possible being ready to cut rates. Should we be saying to people, it's time to look at the equities market?
Well, my position, and you know, just to look at the point that you raised, firstly, we know that rates were initially increased to curb inflation. You know, we also know that a significant part of our inflation in Jamaica is imported. And now with the passage of a hurricane and you know, the food stock certainly taking a hit because of the impact of agriculture, we have to consider that, you know, we cannot predict exactly where the central bank is going to go. My position on this has always been, it is always a good time to invest in equities.
Okay.
The fact is that if you look at a solid company with a solid balance sheet that has growth prospect, that is investing in research and development, new products, new solutions, then the only likely thing for that entity is growth over the long term. I think one of the challenges when we look at the equities market to make us rich overnight, you know, in recent years, a lot of people have been drawn to the equities market because of the IPOs that give you 100% return in a short term. You know? But traditionally, investing in equities is about ownership of a solid entity and allowing yourself to grow with that entity, and you continue to invest and increase your stake. And we have seen that it is really a very good approach for individuals. And I'm not saying that you can't buy something today and you make 25% and you sell it. That's all in the game, you know. But when you try to chase the bottom of the market and run from the top of the market, a lot of times you end up in no man's land.
Yeah.
And so you want to ensure that you're strategically positioning yourself over time to take advantage of the growth from equities. And in fact, when equity values are as low as they are now, it's certainly the best time to be investing rather than waiting for the escalator to start climbing.
Interesting. Are there any particular stocks that you guys looking at QMAX now? I'm sure the viewers may want to ask, you know.
Yes, yes. We're always looking at particular stocks, and this is my invitation to invite the viewers to reach out to us at QMAX so we can sit down and have that one-to-one conversation. You know, we find that what is good for the goose is not always good for the gander. And so we prefer to have that conversation on a one-to-one basis.
Conversation. Yeah. Are there sectors locally that you particularly like?
I mean, I think generally speaking, we look at every sector. I don't think you can find a sector in Jamaica now where you do not find some bright sparks.
Okay.
You know what I mean? Certainly, there has to be concern in terms of what is going to be happening in retail. The ability to access raw material, the cost of those increasing, you know, because of certain challenges that we might be having. But because our recommendations are always significantly research-driven, you know, that is why we tend to have that one-on-one with clients, look at where they are, where they're trying to go, and then we say, well, we have a conversation with our research team, and we try to put together a portfolio for our clients that is suitable for them.
And that portfolio approach that you talk about is what is going to differentiate QMax from the others, you think?
I think definitely what is going to differentiate us and make us stand out is the assertiveness or aggression with which we ensure that all our decisions are client-centric, you know? I am sure you can get a diversified portfolio anywhere. Maybe some people place a greater emphasis on it than than others, but at the same time, you know, we're looking out for you. We're looking out for your good. We're looking out for what is best for you as a client, and not necessarily what is best for QMax. Because when our clients win, we always win. You know? But there are a lot of times when you can seem to be winning and your clients are not winning, and that is not sustainable. So that is why our approach and certainly our competitive advantage is the fact that our client is at the center of everything that we do.
Absolutely wonderful chatting with you today, Miguel. Couldn't have said it better. When we look at this market, you're saying your clients will be making it to the top because of that client-centric approach. Where do they contact you? How do they reach you?
Well, our clients can reach out to us through our website. They can contact us by dialing 926-7767. Our website is qmaxwealth.com, and they can also email us at clientservices@qmaxwealth.com.
All right. Miguel Lewis is Business Development and Sales Manager at QMax Wealth. Sounds like he knows everything about the company and the products that they're offering. That's why he's the Business Development and Sales Manager. Thanks for talking to us today. As we always say here on Let's Talk Stocks, we give you information to make better financial decisions. Come back with us. Tomorrow morning at 9, we'll have another insightful program lined up for you.